kind of business. We looked at the methods of calculating the interest, looked at the sum of digits, and the actuarial method. So today I want us to move on, and will not take too much time today. So termination of hire purchase uh, kind of a contract. Now this is a contract like any other contract, and it can be terminated. We have various reasons that may lead to a hire purchase contract being terminated, and we will look at them in our discussion forum. So for today, I want us to concentrate on mainly the calculation part of the accounting entries that we can make when we are terminating a hire purchase kind of business, and how we can make them. So that is what we are going to do basically today. So what I would do is I'm going to post an example in our under the our public chat, and then we will look at it together. And I believe that we can see our public chat. I've already posted the problem. So we have been given the problem there, that there was a vehicle whose cash price was 5,000. These are hypothetical values. There is no vehicle that can cost 5,000. So the cash price 5,000, then the provision for depreciation 3,200. A full year depreciation is charged in the year of purchase, but none in the year of disposal. Then the hire purchase creditor on 1st January 2016, the amount was 1,800, the installments being 250. So the 1,800 was the deposit. The interest is 50. We are told that the car was involved in an accident in May 2016, resulting in a total write-off, and the sum of 1,000 was received from the insurance company. All the installments and including 31st May were paid. So if the person was paying 250 per month, then he paid it in the month of January, February, March, April until May. So we can get that. Then we are told that a payment of 930 was made on 30th June 2016 in full settlement. So our task here is to prepare the accounts that will be affected when this contract is terminated. Remember, the vehicle has been involved in an accident and it has been written off. So the first account that we look at is the account for the hire purchase creditor, the person who purchased the vehicle. Now, the hire purchase creditor, we are going to look at all the payments that the creditor paid. One, we have the deposit. Deposit which was made on 1st January, and that was 1,800. That was the deposit. Then apart from the deposit, we also have installments that he paid, and in installment he paid installments between January and May, and get the number of months there between January and May. So January to February, that is 1, February up to May, I think that is 5 months. And in each month, the installment amount was 250. So we can get that. So we'll have 250 times 5. So what will that give us? 250 times 5. Numbers? 250 multiplied by 5. Yes. If you multiply that, that will be 1250. 1250. We are still on the creditor. Now, if you look at the problem again, we have been told that the vehicle was written off, and all installments up to and including 31st May were paid, so that we have also already taken care of. But we are told that a payment of 930 was made on 30th June in full settlement. So the creditor settled all his payments on 30th June. So we have bank settlement also paid. We're looking at all his payments. So the bank settlement, the total amount was coming to 930. So the bank settlement 930. And remember, we also have the higher purchase interest. If you look at our problem there, Finley, we have been told that the higher purchase interest is 50 shillings. So meaning that now between May 31st to December 31st, when we are preparing this, the higher purchase interest will now be, we multiply 50 shillings by the number of months there. So the higher purchase interest so that will be 50 times 6. So what will that give us? 50 times 6. Cover 300, that's okay. So the interest there will be 300. Waweru, Rebecca, that is okay. Okay, so these are the amounts that were paid by the creditor, so we can simply prepare an account for the higher purchase creditor using those amounts. I wanted just to show you how to arrive at them. So higher purchase creditor. the T account like the other. Sorry for my drawing. So we have the year as 2016. 2016 as the year. So we'll start with the first one. For January 1st, there was a deposit of 1,800. So Jan 1st. Remember, when the creditor is paying, it means that his account is reducing. So we can. Yes, Albert is asking why the installments are paid in 5 months. The installments were paid between 1st January to May 31st. So if you get the number of months there, that is 5, between January 1st and May 31st. But now the interest is from June to December. We are getting the interest from June to December. That's why we are using 6 months. I hope I'm clear there, Waweru. Okay, so we have now the deposit. We credit the hire purchase creditors account. So the amount here is shilling. Sorry, we didn't indicate that. So the deposit there will be 1,800. Okay. Then we have the amount of installments, the bank installments. The installments were paid by May, so we have May 31st installments. And we have already calculated this, and I hope you have it somewhere, please, that our installments are 1250, so that maybe the members who are joining late, they should know how we arrived at the 1250. Then we have the bank settlement that was settled on June 30th. So bank settlement. Wait, sorry. That was bank settlement was 930. Then we have the higher purchase interest, which we will credit, so December 31st. So higher purchase interest, and this we've got as 300. Now we, after record, I don't think if we have any other item that we have not recorded. We have the deposit, the installment, the bank settlement, and the interest. That is okay. Now we need to balance this account, and I want maybe some of you to add the debit side, the totals, and the totals for the credit side so that we can get that. Add debit is 2180, credit is 2100. So we have a difference of 80. So that difference is the higher purchase interest penalty. For December 31st, 31st will have higher purchase interest penalty. Sorry about that. So the penalty there will be 80 shillings. 80 shillings. So that now our total here is 2180. And the total on the other side is also 2180. So that is the higher purchase creditors account, higher purchase creditors account. So I want us to move on because for the higher purchase interest account, we already have the figures. We have the interest amount here, and also we have the penalty. So we can prepare the next slide. The account for higher purchase interest. Again, we have 2016, 2016. So we had already credited the higher purchase creditor by the higher purchase interest. So remember, this is like the other account. So for the higher purchase interest account, we will now debit the higher purchase interest. So December 31st. In the details now we'll have higher purchase creditor. The details. Higher purchase creditor. Okay, thank you. Now the amount that we are going to use will be now be the 300, which was the interest, plus now the 80 shillings, which was the penalty for the late payment of the interest. So this will come to 380. This will come to 380. Now that is the only transaction that will record there. Then we have to balance it. Now in balancing it, the balancing figure should be taken to profit and loss account. So we'll have December 31st, P and L then the entire amount, take the entire amount to profit and loss, 380. Remember to include the amount here so that this will be balancing at 380. Account should be balancing at 380 on both sides. Please, the total amount there should be the same line. So that is the hire purchase interest account. Any question up to that point? Okay. Now, if there is no question, then we move on to the account of disposal of the vehicle. Disposal of the vehicle. Maybe I can open another slide. Or as you can call it, vehicle disposal. Vehicle disposal. So again, we have the amounts there in shillings. The year is 2016. About the sides. Okay. Now, when we first of all, we have to recognize the value of this vehicle. Value of this vehicle was 5,000. So we have June 30th. June 30th. So we have the vehicle, the value of the vehicle which is costing 5,000. 5,000. That is the value of the vehicle. We have a provision for, we had a provision, if you look at the problem again, provision for depreciation 3,200, so that was provided. The same date, so June 30th. June 30th, depreciation 3,200. That is the provision for depreciation. Remember that if you look at the problem there, we have been told that the car was involved in an accident in May, resulting in a total write-off. And the sum of 1,000 was received from the insurance company. So the sum of 1,000 was received from the insurance company, so we credit that June 30th. insurance, the amount there is 1,000, 1,000. Okay, so that is what we have there. We're disposing the vehicle, so you have to add both the sides. On the debit side, the total is 5,000. On the credit side, the total is 4,200. So what is the difference there, members? What is the difference? The difference is 800 on Koba, the other Rebecca, Kimani, Waweri, Regina. Okay, Joram is also typing 800. So that difference again is taken to profit and loss account, and you have to indicate whether it is a profit or a loss. Remember that the value of this vehicle was 5,000. We provided for depreciation of 32, and insurance, the money that we got from insurance was 1,000. So is the 800 shillings a profit or a loss? Is the 800 shillings a profit or a loss? Yes, members, is it a loss or a profit? Yes, I'm seeing on Koba typing profit. Rebecca Kimani profit on Koba loss. Okay, the 800. Remember, the cost of the vehicle was 5,000, and what we have managed is 4,200. So it means that we have a less of 800. We have a shortfall of 800. So that 800 is a loss. So 800 is a loss. So that now this account 5,000. 5,000 is now the balancing figure for the vehicle disposal. Then the next account that we can prepare is the depreciation or vehicle depreciation. Depreciation of the vehicle. So this one is very simple. We just copy what we have in our previous slide, and then we balance it because we only have just the provision at the beginning. So maybe if I can show you the other slide for vehicle disposal. So this is what now we take, because we have credited the vehicle disposal by the depreciation. Now when we come to the depreciation account, we'll now debit it, and the detail will be vehicle disposal. So we move to that slide. So June 30th. We can write just disposal in our details. And the amount is 3,200. And then now we balance this. Now for this, we will have at the same date the balance of 3,200. Thousand 200 as our balance. This balance, remember this balance was, so the date here, please, the date here should be Jan 1st because it was brought forward. Jan 1st, the balance brought forward. Balance brought forward 3,200. So this is the disposal on June 30th. Disposal 3,200. So that will be self-balancing. So we have that 200 then. And 3,200 there. That's okay. Any question? So you can also decide to also prepare the vehicle account, the account for, okay. Maybe I wait. Mwangi Cecilia is typing. So if before we go to prepare the vehicle account. Yes, Cecilia. On mute again. We can prepare the vehicle account, just a simple one. Okay, the balance brought forward is not for January 2017, it is for January 2016. Remember when the vehicle was being bought, there was a provision for depreciation of 3,200 in January 2016. So if you look at the question again, you will find that the provision for depreciation as of January 1st was 3,000. So that's what we are using here. That is what we are using. not 2017. 2017, this transaction would have been, we are completing it in 31st December. So by 2017, there will be no any other transaction for importing this vehicle. That, remember, the vehicle has even been written off, and all the amounts have been paid by insurance, and also the settlement has been made to the creditor. So the balance brought forward is for January 2016. I hope we am now clear. Okay, thank you. So we can prepare the account. This one, there is no much that we will be doing here. First of all, we have the balance brought forward. That is for the vehicle. That will be on January 1st. Balance forward. The amount there was 5,000 for balance value of the vehicle. Then June 30th, we have the disposal. So if you check the disposal, the way we prepared the vehicle disposal account, we had debited it with the vehicle. So when we found the vehicle, now we credit it, disposal, and the amount is 5,000. So that is how we can prepare the vehicle account. Any question so far on the termination, the accounts that we are supposed to have when we are terminating a hire purchase contract? Any question in our calculations, the way we have prepared it from the calculation of installments, how we've got the bank interest, and how we have also prepared the hire purchase creditor, how we have prepared the hire purchase creditor's account. Yes, Rebecca, the disposal is not 3,200. The 3,200 is the provision for depreciation. The provision for depreciation. So when we are disposing, maybe I can go to that again. Rebecca, the disposal should not be 3,200. The 3,200 is the provision for depreciation. Now, Waweru is asking that if the account between the parts of 5,000, does it not change until June? Now, we from the problem, we have not been about revaluation. If maybe there could have been a revaluation of the assets, and then maybe a new value determined that new value. But for this case, we are just going to use the value which is not that we have not done it. Any other question? Now, what I'm saying on COBA,